Terus. Selamat sore, selamat malam, Bapak-bapak, Ibu-ibu. Sebentar lagi kita mau mulai acaranya. Harap duduk di meja yang telah disediakan.
I was actually sitting on this one over here.
Oke, selamat malam semuanya. Ladies and gentlemen, esteemed guests and valued partners, good evening. It is with immense pleasure and gratitude that I welcome you to this event where we'll be talking about how to leverage financing to grow your London property investments. But first and foremost, I would like to extend my thank you to each and every one of you who has made the time to beat Jakarta traffic and come all the way here. It speaks volume to us about your interest in exploring the opportunities in the UK. I also want to take a moment to express our appreciation. We are from Benham Reeves. My name is Alia. We are a company based in the UK. We have 20 London branches and just recently opened an office in Jakarta. So today, even if you are a seasoned investor or an entrepreneur or a new first-time buyer, this will be a very good place for you to gain insights in the London landscape. So we hope that you are able to gain knowledge from the inside, and I want to introduce you to our three speakers. The first one will be Mark von Gunder, our director from the UK, who will be talking about the UK market, and Will Swinburne from Berkeley Group, who is the top and premier developer in the UK, and Scott Mitchell, a mortgage advisor from SPF. So to start the event, we want Mr. Chris Wren to give a welcome speech. Thank you so much.
Thank you very much. Not so much of a speech, but just a welcome. I think as we're starting a little bit later to have accommodated those people that were travelling in, I think those of us who have experience of Jakarta in particular know that lots of things can happen in a day to make things later on in the afternoon and the evenings just a little bit more challenging. But I'm in no doubt that those of you who have made the effort to come here this evening will indeed gain the insight that you're hoping to get in relation to the UK. It's, on behalf of BritCham, it's a pleasure to welcome Benham Reeves as part of a collaboration here with BritCham, talking about London and property, particularly relevant actually for us as a Chamber of Commerce. One thing that some of you may not be overly familiar with, 3 years ago, mid-2020, we established our education centre, and this is a centre that provides an holistic approach, a very informed approach for Indonesian families and their choices of education in the UK. More and more parents are starting to consider how they address the accommodation conundrum for the kids, and particularly with the challenges in and around London as well. So that's, I think, one area that it's very interesting for my team, and the reason why Chenny, who heads up the education centre, and Dana, who supports her, here, so that they can perhaps add some information about property options as investments and for family members to use. I really won't take up much of the time that's left, just to once again sincerely thank Benham Reeves for the confidence that they have shown in offering BritCham the opportunity to be a part of this collaboration, to act as the event organizer, to extend invitations to our members and the wider stakeholder network. Just this morning we launched our Business Confidence Index results with Martin Kent, His Majesty's Trade Commissioner for Asia Pacific, and afterwards in a private meeting we talked so much about brand UK, brand Britain, and probably nothing can be more out there than the reputation that the property market, and in particular the property market in and around the capital, and what it represents to the image and reputation of the United Kingdom as well. So I think all of this lends very, very well to the brand of the UK, lends very, very well to a greater understanding for us to be able to provide also some information to some of those parents that are looking for options to support their education decisions as well, and for some of you in terms of adding property and London property to your portfolios, whether that's as a working individual or maybe thinking in terms of retirement options, recreational options, whatever they might happen to be. Anyway, welcome, and I'm looking forward to being more informed about what's available. And with that, I believe, yes, Mark, I'm handing over to Mark van Grunher, who is Director of Benham Reeves.
Thank you. Well, I'm not going to use a mic because I've got quite a loud voice and I really hate mics as it is, so I think people find it a bit deafening if I use a mic, to be honest. So tonight, thanks very much for that introduction. My name's Mark van Grunher. It's not a very English name, I might add, but I am born in the UK. My father was born in the UK, but it is a German name, but I am British. And tonight I'm just going to give a run through on the London property market and give some insights. And I know this is a BritCham event, so everybody knows the UK quite well, so bear with me if there are things that I talk about that you already know. And I hope I'm going to talk, I didn't get the clicker now, and I hope I'm going to talk about things that you don't know. And if you know it all, then you know as much as I do. So, London property market update. So, for generations, London has been so much more than just the capital, right? Right, the capital of the UK. It's a global centre of culture, finance, and of course education, which I'm talking about here. And education makes, and I do refer to education quite a lot because it makes up a huge proportion of the London property market. London's not just about owning a piece of real estate, it's about owning an asset that's resilient in times of economic cycles, which we've seen, downturns and upturns. London property has done very well as an investment asset class. So this is a good question I always ask. I think it's really important, is why you're going to invest in the UK. I hope everybody knows the UK, but why London specifically? And I think it's to do with its appeal and its resilience. You know, as I said, we've had up, downs and downturns in the economy and global challenges going on, and London generally has always weathered the economic storms, political changes and global uncertainties that we see. Yet it continues to be a hub of innovation, commerce and creativity, attracting people from all walks of life. And I think that's a fundamental, very important thing about the UK, is it is very open to everybody. And that's why today there are over 300 different languages spoken in London on a daily basis. As I said, you know, I talked about education, and education is a massive driver of the property market. And can you believe 538,615 international students, that's in addition to UK students, study in the UK, of which a third of those, just over 180,000, study in London. And when you break that figure down even more, the first year, most of them are guaranteed accommodation. After that, then they're on their own. And a lot of those go into private rented sector. And today, London is often classed as the top student city in the world to study, and as I said, with that number of students studying in the UK, but in London a large proportion. This is a really good stat, the one at the bottom. $3.8 trillion are traded on a daily basis in Forex in the UK, in London, obviously a financial centre. And that's a third of worldwide trends. That's bigger than New York, Singapore and Hong Kong combined. And that's an awful lot of money that floods through the UK and makes it a centre for finance still. We talk about tech a lot, and as a developed country, I think everybody who's British should be proud of our tech industry. I mean, California has Silicon Valley, but us Brits, we love to undersell ourselves. So we've named our term Silicon Roundabout, which is quite funny, but it's the absolute truth. That's a massive driver for employment, and London was just named the most high-tech city in the world, and it beat New York and San Francisco. On top of that, London's always been a safe port in the storm. As I said, when you see global crises, people come to London, and because they can invest in London, as I said, it's very open with lots of languages spoken, it's open to everybody, but it's a very safe place for people to invest and for them to live. It's really resilient too, which is why I term London property as an asset, a kind of bulletproof style investment. You know, it's long been considered one of the world's most trusted asset classes. It's not just owning a flat or a house, it's an actual asset class that gets traded because it can deliver a stable income and a decent yield. But also it has generated a capital gain on a consistent basis since they started records a long time ago. In recent times, with challenges that we've seen, the demand for London property has remained really robust, and that's from both domestic as well as international buyers. I am going to talk a bit longer than 5 minutes, so it's going to go as long as it takes because I'm going to run through, but I'll try and keep it as brief as I can. Here's a fascinating piece of research that we saw, is we look at what London property does versus other asset classes. So actually here it's number 2. In reality, London property is number 3. Number 1, if anybody can guess what it would be, Bitcoin. Very good. Bitcoin. Gosh, every time I ask that, no one says anything. Even people who listen to my speech because they're obviously not listening. Bitcoin did 4,993% over the last 10 years since 2013. However, it has had some very scary moments if you put all your money into it, where it's gone through the floor. But so we don't count that because that's like gambling. We may as well bet on horses. But gold is a good asset class. That obviously has beaten London property 44.3% over a 10-year period, and then silver, the FTSE, everything after that. But I think that shows why it's a strong asset class. Now just turning to an update on the market. I'm pleased to say, as I said, it's remaining really steady. And I think there's a reason for cautious optimism at the moment. The main reason, and Scott's going to talk about in a minute, and he's going to give us some really exciting insights of when they're going to drop rates. I'm sure he knows, but Bank of England kept rates at 5.25%. That's the 5th consecutive month, and we are, I'm sure I'm not taking Scott's whole talk, we are seeing lending rates, so the rate that people borrow are actually coming off now a little bit. And that's the first really positive bit of news. The second was the sharpest fall in annual inflation we've seen to 3.4% in February. And that's the lowest level we've seen since autumn 2021. And as I said, I think because of that, with inflation coming off, the target's 2%, I think we're not far away from that. I think it's going to be sticky, but my prediction is we should see 1 or 2 cuts by the end of the year, I hope. But I'm pretty sure there will be now. The last thing was the interesting thing here that we've seen is that the lender nationwide, they've shown that the market rose by 1.6% in first quarter of this year. That's versus a decline of 2.4% in the last quarter of last year. And that's been for a few reasons. That's mainly with a reversal of the race for space. Lots of people left during COVID, and we're now seeing people coming back in, and that has affected the rental market as well, which I'll talk about in a sec when I talk about the rental market. The interesting thing that's not on this slide is half of the purchases this year have been by people that have not owned a London property before in the UK. That doesn't mean they're necessarily young first-time buyers, but that is half of the purchases were done by people who've never owned a UK property. So this is very positive, and last year's predictions that we all read about in the press, where we're going to have this massive crash, well, obviously it never materialised, because that's what the press do. They love to talk things up, and then they like to smack up. One thing that helps drive the property market is migration, and last year we had just over 600,000 net migration figure into the UK. 600,000, and the one thing all of them need is a home. And those people, whether they rent or they buy, that underpins demand. And so you've got Bloomberg at the moment predicting that we'll have an undersupply of 100,000 homes a year until the next Parliament, due to the undersupply and the lack of stuff that's being built. Office of National Statistics is saying that the population in the UK within the next 2 years will be 70 million people. That's just constant people coming in. That's net migration. That's constant people coming in, which increases the amount of demand on available stock. What's more, the low level of unemployment at under 4% means there are virtually no forced sellers. So the market is quite strong. Financial crisis was awful in 2008, but it stopped the banks over-lending, and it means there is not the same amount of pressure for people to sell. And as I said, I think this is a great line that they had in the Times. The truth is, Britain simply isn't building enough homes. And I think that's true, and that's really important. Another interesting stat is that only 1,500 new private residential projects went under construction last year. And that seems a lot. 1,500 people go, wow, that's a lot. Actually, it's not. It's the lowest level, the lowest number we've seen in a decade. And maybe Will can explain why developers aren't building quite so much. But that's a massive, massive, massive problem with the market. Not enough is being built to come on. And that level is 50% below what it was 5 years ago. And if we keep on building too little, it means prices only get supported, which is good for investors. But it's bad for first-time buyers who get left in the market, not able to buy. So now I'm going to talk about the rental market, because if you're buying in the UK, even if it's for your own home, if you're going to rent it for a little bit, then it's important that the leasing market is underpinning that, and there are enough tenants. Well, firstly, UK rents went up by 7.8% last year, and they're now 29% above pre-pandemic levels. And the reason I say that, because during the pandemic, there were no students. And as I talked about, 180,000 students in London, of which about 3/4 of those rent privately. There weren't any, because they all stayed where they were or went home. In addition to that, there was a reversal of working from home. Those people went out. So the rental market in London came off quite considerably. We saw rents come off a lot. But we're still today, last year, 29% higher than they were before that happened. So actually, that's really positive for the market. Office for National Statistics, that's the government. They look at government figures. They're actually saying private rents increased by 6.9%. But the figure I quoted earlier is slightly higher, and that comes from one of the property portals. And the figure the Office of National Statistics, because they've been keeping records for a very long time, is showing that this is the highest increase they've ever seen since they maintain this index. And we see them as a business staying at their highest level that we've ever seen it. And we're seeing in some cases increases far, far, far higher than 8%. the amount that people spend on rent is also pretty incredible. So last year, £32.1 billion was spent on rents in the UK. In London, of which, and that's the whole of the UK was 82.6%. So 32 out of 80, but over almost 40% was spent in rent in London, which is a pretty massive figure. But the reason that's interesting is because that's equivalent to the total value of all the homes that were sold last year. People spent more renting than people did buying. It's pretty strong statistic. And with net migration by international professionals and the increase in international students, the level of demand, in our opinion, is only going to keep going up. We see as a business, every property that we put on the market, they attract multiple applicants and will often receive over 20 inquiries within the first 24 hours that we put it live. That is a doubling the number that we saw pre-pandemic. And the reason I keep referring to the pandemic is everyone thinks I'm saying we're comparing it to the pandemic. I'm looking at figures pre-pandemic. And as I said, the reasons that this happened are reversal of working from home. Lots of people moved out of London because they wanted open spaces. They didn't think they were going to have to go to the office, but of course lots of companies, Goldman Sachs, Citibank, Google, are insisting that they don't want anybody working from home. And even if people can work from home 2-3 days a week, the costs of travelling into London are very expensive. And it's not just about living in London, about working in London, the life in London, people want to live there. So we're now seeing those people coming into the market who are renting in the capital now. Second is increase in the numbers of international students, which is only going to continue. And for British people, we hope Donald Trump will come back in and make more issues between the US and China, because that just focuses Chinese parents on bringing their children to the UK and education in the UK, which will increase English student numbers. And it did last time. And the good thing is when they go home, they have an affinity with the UK as opposed to affinity with the US, and that's good for us. And then the other thing, and I know Scott's going to talk about financing, but the increased costs of borrowing, that is terrible for investors, but it's really bad for first-time buyers. Because first-time buyers, they struggle as it is to get the deposit together, and then they now can't afford to fund their purchase. So those people as well are renting. But it's really important when you are buying. Obviously, I'm painting quite a rosy picture of the UK as an investment, but you can't just buy anywhere and expect to make money. You really do need somebody, whether it's me or an agent. You really need to get some advice, and independent advice is really important about what you're going to do and why you're going to buy. London itself has 32 different boroughs. Council taxes are different in them all. Transport's different in them all. The demographic of the type of tenant is different in them all. And I recommend you get good advice, or you get stuff. You know, you can really make a bad decision, think you make the right one, and at least if you have a professional guiding you, you hopefully will make the right decision. So one thing that people often don't talk about and don't think about is who the tenant is. And I've talked about people coming back in. But it's important when you buy a property that you think about who the tenant's going to be, what they're going to want, and what are they going to be willing to pay for it. So we look, as a business, we have a lot of tenants. We let to 3,500 tenants in London, because we're only London focused, every year, and we have a big database. And so we are, this checklist is actually a tenant checklist, so this comes from our last survey. So the one at the top is obvious, location, right? So everybody talks about location, and that's really important. Transport links during COVID wasn't quite so important because people were working from home, but actually it's jumped back up to the top of the list. People want to be no more than a 10-minute walk to the station. And that's really important. People think, oh, 15 minutes, it's okay. But tenants, when they get asked, the target time is under 10 minutes. Close to good schools, so that doesn't apply to single people, but families want to be in areas that have outstanding schools. So again, that's important. So if you're buying a house or a 3-bedroom apartment, you want to be near a good school, Proximity to green space, that's going back to COVID times because people were worried, stuck in their little flats, but with no outside space. So that's a big thing that people remember. Local amenities is important. But the one down here at number 6, fast broadband, that's really important. Everyone thinks, oh, everywhere has fast broadband. Well, in the UK, sadly, we don't. We don't have fibre everywhere, and some buildings don't even have broadband. And you have to declare that to a tenant, and you need to know if it has fast broadband. And the last one is professionally managed. And that isn't just a plug for us. That's because some companies, and Japanese companies especially, we have a Japanese team that looks after tenants from Japanese companies. They insist that they won't look at a property if it's not professionally managed. So that's really important. And as I said, it's important to have the right person helping you, and this is a plug for us. If you haven't noticed, it's our time. So this tells you we've been going 65 years. I see BritCham 75, so we've got a few years to catch up. But we've been going 65 years. Clearly I haven't, but we've been doing it a long time. We've been focused on London property. That's what we do. Today we have a total of 35 global branches, 21 in the UK, but they're all in London, because we think it's really important that you have a local presence in different areas where people want to live, whether that's for the tenant or landlords. 14 international offices. We added to that Jakarta, which Ali is working for us. I'm not sure she did before me, but Ali works for us here. Whittier's from our Hong Kong office. We're here to help you and to help clients. This is not just about selling. This is, if you buy for investment, you can speak to them in your time. And then going around the little circle, we offer a real one-stop shop. And that's from advice on what you should buy, where you should buy, and if you find a property, why you should buy it, why maybe you shouldn't buy it, or things to think about, to helping you buy, snagging and handover. That's really important. If you buy a new flat, you want to know that it's been completed to the way it should be. And so we go and check it for you. Lots of people genuinely ask, do I have to fly to London to do the closing? And you don't have to. We do furnishing and refurbishment. Again, we do it in-house. 99%, it's not quite, it's 97% of one-bedroom flats have to be furnished, and that by that I mean tables and chairs and sofas in order to let. 2 bedrooms, it's about 75%. We do that in-house. We do lettings and property management, collecting the rent, credit referencing the tenant, going through the whole process and dealing with them until they leave and checking the property for you and looking after it. Tax returns, it's a dirty subject because no one wants to pay tax. But in the UK, whether you have tax to pay or not, you still have to do a tax return. And we can help you. We have a tax advice on the side. We can give you ideas of how to save on the tax you have to help you exit and sell it. And then around in circles. So we help people expand their portfolios. And that's it. I was going to ask questions, but I think I've talked for too long. So thank you very much. I'm here. If anybody's got any questions, or for me, Anita is our managing director, and she's sitting there, and she's doing the talk at the end. No, she's not. But thank you very much. And it's Will. Thank you.
So Mark's just told you kind of why London and who you should buy through. I'm going to tell you what you should buy. I'll keep my bit relatively brief because I think a lot of you are here today to hear kind of why you should buy there and how to buy there. I'm from Berkeley. Similar to like Mark said, I'm also British, but I've lived in Singapore for the last 6 months. Getting over to Jakarta for me was a lot easier than if I was based in London. But yeah, so first time in Jakarta. Worked for Berkeley for about 3 years now, and 2 years of that was spent in London, and so the rest of it's probably been in Singapore. So just a bit about Berkeley first, and then I'm going to talk about a couple of developments that we're showcasing tonight. You've got the brochures on the table, I believe, as well. But the reason we're showcasing these particular developments is because they represent primarily what Berkeley are all about. Everything we offer, everything we do, what separates us from the rest of the developers that are building in London. So Berkeley is the number one brownfield regeneration developer in the UK. And brownfield regeneration is a really important phrase to kind of bear in mind, because we take old unused land in already established communities and we turn it into something completely brand new. So what we do doesn't only benefit the buyers, yourselves, the tenants, the people living there. It also benefits the communities around us. And we're very focused not only on just the apartments we're building, places where you're going to be living, where your tenants are going to be living. We build mixed-use developments. So we focus on commercial space, we focus on facilities. This is world-class facilities. Commercial space that we control, so we control the tenants that we bring into the developments. And we've also got a massive focus on green space as well. So everything that you will hear is important to where you buy, what you buy. This is all stuff that we provide. So this is just a little bit about Berkeley. We've been operating for 47 years now, so for quite some time. In that time, we've built developments all over London, north, east, south, and west, and also the surrounding counties. So we're not just London focused, we're London, we're Birmingham, and we're also the areas kind of surrounding London. Since that date, 47 years ago, we've never not completed a development. So putting your money into Berkeley is very safe, and that's kind of proven through what we've done and delivered throughout the years. We are a FTSE 100 company, and we've also got 8 offices globally. So we've got one in Singapore, we've got one in Dubai, one in Hong Kong, we're in China as well. And I think this is a really important thing to note. Not a lot of developers are global. They don't have that global presence. They sell globally, but they don't have the global presence. So they're not within the time zone of a lot of their buyers. Something that's nice about Berkeley is that we have those offices in these time zones. Singapore's only an hour ahead of here, I believe. So, you buy a Berkeley home, you've got our office in your time zone to kind of check on anything to do with your property, if you've already exchanged, customer service procedure, all the way up to completion and any questions you might have after. 19,640 homes, so that's the number of homes we've built in the last 5 years, and contributed 13.8 billion to the London and UK economy. Financial strength is also something to really sort of consider, especially when you're looking into the developer you're going to be using, because we sell primarily off-plan homes. So financially we're very strong. We don't borrow money to build homes either. So I know a big thing is probably when you're looking to invest your first portion of a lot of money into your first home is what if I put the money in and it doesn't go forward? What happens to my money? Like I said, in 47 years we've never finished a development. But we're also a cash-rich company, so very unlikely to happen. And in terms of the developments we actually currently have, so that number is actually wrong by 2. We currently have 49 live developments. So at the moment we've got 26 live developments in London, and we've got 23 kind of in the surrounding areas. And the number 3 on each one there, we've got 3 forthcoming developments that we haven't quite launched, both within London and outside of London. The price range of all of our developments across our entire portfolio is £265,000 all the way up to 35 million. And kind of the average price point you're looking at when you look at our developments is around 600,000 to a million, around that kind of portion. So whether you're looking to kind of spend a very small amount of money in your first investment, or whether you're looking to kind of buy something quite extravagant, we have that product for you. And as you can see from the map of London just here, north, east, south, west, central, we have kind of something everywhere. And as I said in the first slide, we're a long-term developer. So all of our developments, they have a lifespan of around 10 to 30 years. So we really do build our developments with kind of investment in mind. If you buy especially into the first phase of a Berkeley development, your money has endless amount of time to grow. We tend to have 4 or 5, 6 even phases within our developments. Every time we complete on a new phase, there tends to be commercial space and new facilities opening. So every time something new happens on the development, it's a new reason for the value of the development to grow, and therefore the value of the property to grow. I've just added this in for those of you familiar with kind of London. This is just the general tube map, and this is where our developments are on that tube map. So you just get more of an idea of exactly where we are compared to certain areas you might be familiar with. As well as Mark's last slide said, there is an investment checklist that really is kind of what people are looking for, and that is also something that we really consider when we're building our developments and when we're buying land. And location, location. It's 100% one of the most important things. The nearer you are to transport connections, the nearer you are to pretty much everything else. Education, lifestyle, everything like that. So So we really do focus on things like that. And a lot of the times when you see our developments, they are minutes away from transport links. So the Berkeley effect is something that if you speak to someone from Berkeley, they sort of go on about quite a lot. So I thought I could not put this slide into the presentation. But it really is something that is generally true. So Woodbury Down, Royal Arsenal and Cubrook Village there are three developments that are already quite far in to the lifespan of them being built. All of them first launched in around 2008, 2009, and they've been going for kind of 10, 15 years. So what we use then to show is that generally Berkeley always outperforms the surrounding area in terms of the growth of the properties by on average 46%. So you've got different kind of percentages just here. Something else that's really nice about the slide is you can see from the top left picture in each square, that's what the land and the area used to look like before when we first bought each of the developments. And then what you can see in the rest of the pictures is kind of what we transformed it into. So we really are, we focus on buying kind of old brownfield land. We're not knocking down, we're not knocking down buildings. We're not sort of taking land that's already nice. We're taking old land and we're making it into something beautiful, something usable. So the two brochures you guys have got on your table today are South Key Plaza and 12 Trees Park. The reason we're kind of focusing on these developments, they're two East London developments. East London being kind of one of the real focuses of regeneration and redevelopment at the moment. South Key Plaza is in Canary Wharf, financial centre of London. It's an area you will all be kind of very familiar with. South Key Plaza is a bit different to 12 Trees Park. They are two completely different products. South Key Plaza was launched in 2015, and it's probably got about 6 years left until it's complete. It's around a 1,500 home project, and it's 3 tall skyscrapers. But even within those skyscrapers, we're still building 2.6 acres of landscaping. We've got facilities all throughout the buildings. So you can see here, it's Canary Wharf just here, just a general map of London with kind of exactly where the development is. Like I was saying about transport links before, South Key Plaza is kind of an example of that. 3 different train stations right next to the development. We're even building a bridge so that you can be even closer to the development. So the nearest train station is currently about a 6-minute walk away. We're building a bridge to turn that into a 2-minute walk. So we think about all of these things when we're building the developments. This is just a little slide about Canary Wharf generally, why investing in Canary Wharf is such a good idea, what's kind of currently happening in Canary Wharf. So Canary Wharf is becoming a lot more of a lifestyle destination as opposed to just the sort of the banking and the business hub that it always has been known for. So a lot more investment is being put into shops that are there, the restaurant, the bars, the lifestyle. Sort of shows you the number of square feet of offices, average wage. The average wage in Canary Wharf is around £135. So especially, this slide is really more selling Canary Wharf in itself. But if you're looking to buy at a development, buying somewhere where the central business district is, where you've got people that are going to be looking to rent there, this is the kind of area you want to be looking at. So this again is just focusing on the actual development. So Hampton Tower in South Key Plaza is something we launched first. It's completed in 2020. And as you can see, these are all the different facilities we have on here. Each of our developments all 49 large developments we currently have, they all have facilities like this. So, world-class facilities is something Berkeley is known for. And when we build developments that are kind of, acres and acres big, it's kind of easy to see how we would fit all those facilities in. But even when we build 3 just tall towers, we still make space for absolutely everything. So Hampton Tower, which we first launched, completed in 2020, we put 3 different levels of basically every kind of amenity you would expect and want. So you can see we've got screening rooms, dining rooms, residence lounges, we've got gyms, pools, spa areas, kind of steam rooms, sauna. And the nice thing is that even if you then bought into the building we're now selling, you can still use all this, but we're putting more facilities in to the next tower, because we love adding facilities and making our developments as luxurious as possible. 12 Trees Park is the next development. It almost juxtaposes South Key Plaza in a way because it only launched in 2020. This is a 20-year project across a 26-acre plot of land. It's in an area that is relatively kind of in the middle of its regeneration story. So if you go to Canary Wharf, it's very established, there's a lot there. You kind of you can understand exactly why you want to buy there. 12 Trees Park is almost like a new investment opportunity. It's right next to West Ham Station. For those of you who don't know, West Ham is a station that has 5 different tube lines, 5 different train lines going through it. So it's hyper connected. Really easy to get absolutely anywhere. In East London, we've got London City Airport as well. So you can fly to Europe and America. This is about 10 minutes away from London City Airport. And then also to get to Canary Wharf, you can get back there, that's about 10 minutes away as well. We always say with Barclays developments, buying in the first phase is kind of what you want to look to do. But it's all kind of rare to get that opportunity to buy into the first phase. 12 Trees Park is still in the first phase of its kind of 20-year journey. So it's one of those developments that it's the lowest price it's ever going to be. It's at the point, it's at the point where the area's very much kind of, it's still planning for the area around it, not a lot started yet, so you kind of want to get in early. And then again, so you can see where South Key Plaza was just here. So this is just north at the top, 12 Trees Park, just up there. And then this is Stratford. I mean, 12 Trees Park it's almost in an ideal area. It's just above Stratford. Stratford is where Westfield is. It's where the West Ham football stadium is. It's where we had the 2012 Olympics in London. And then below it is Canary Wharf. It's pretty close proximity to the city as well. So it's kind of got the best of every world. But it's new into its regeneration story. So the area around it is still being built, but you've already got the connections to other places. And this just shows kind of what those connections are. So West Ham, it's not really any walk at all from 12 Trees Park. I'd be lying if I said it was a minute. What we're currently selling the building in 12 Trees Park is called Evergreen Point. And Evergreen Point is pretty much on the station. So it's kind of within seconds you can get there. And then from there, these are all the different kind of places. The brochures you have on the table have all of these slides in, all this information in. Yeah, so you can get pretty much everywhere really quickly. And then again, just another few reasons why 12 Trees Park is such a good development. It's 26 acres. As Mark said in his investment checklist, you've got the Wi-Fi as well. We've actually got a Wi-Fi enabled park in 12 Trees Park, so we're always thinking of new kind of innovative ideas. We've got a 4-acre park that goes through the centre of the development, and it's Wi-Fi enabled, so you've kind of got access to Wi-Fi while you're in outside space. So especially for people that are looking to work from home, people that are just generally talking to their friends on social media, whether you're inside or outside, you've kind of got that access. Again, world-class facilities as always. The transport, and you've got transport on site. And then East London. East London is a real focus for investors at the moment, not just because of the capital appreciation projections, but also because of the projected population growth. A lot of people are looking at East London now because the prices, they're lower than if you go and buy in West London, for example. Can be lower than North and South London. The East London is where a lot of developers are looking at new land, looking to start their regeneration story. So, you could almost imagine that you would want to be part of that early regeneration story. And then this again, I don't need to go too much into this because it's very similar to the South Key Plaza side, but it's just listing kind of the facilities we have here. If I got this slide up about any single one of our developments, you would pretty much see the same thing. At a bare minimum, we always have things like gyms, swimming pools, residence lounges, dining areas, and then a select few of our developments we put in cinemas. We're starting to see cinemas a lot more now, things like virtual golf, virtual gaming rooms. So we always, every time we launch a development, we always think of the next best thing we can do. So if you buy in one development and then you the next development we launch, you'll see new innovations, you'll see new ideas. So we are always evolving with the time. But yeah, thank you very much.
Thank you, Will. Thank you, everybody. Oops. I've got about 10 slides, so it won't take me too long to go through them. The key message here is Becca and myself are both here to then answer any questions privately afterwards and tell you about your unique situation. So Mark has fantastically shown us all why we should buy in London. Will has shown you what you should buy in London. What I'm going to attempt to talk about in 10 minutes is how to finance that purchase. The first thing I'll mention as well is if you're intending to buy all in cash and not use a bank to help you finance it, that is okay too. My very last slide, I can show you how to use a cash bought property to still further enhance your investment portfolio or your lifestyle choices that you're going to make. So, SPF, just like Barclay, just like Benham Reeves, we're really big and we're really good, right? That's exactly what we are. Our job is not to give you the money. Our job is to find the best lender in the market who can give you the money to finance your purchase, if that is what you're trying to do. We specialise in many areas, but Becca and myself, along with some members of our team in London, which is over 100 strong, we specialise in expats and foreign nationals not living in the UK, who are going to purchase for their own use, or for their children to go to the UK for education, or for pure investment, so that you can find a tenant to live in the property. And then in that scenario, ideally, with the rental income will pay the mortgage finance for you, and you don't have to pay it yourself. So, how does that work? For most people, that's going to be a buy-to-let mortgage or a residential property purchase. If it's buy-to-let, you've got access at the moment to about 40 potential banks who are promoting themselves to non-residents of the UK for financial services products. If you're buying for the property to be used for yourself, when you use a brokerage like us, like SPF, you're actually being offered the same rates as someone who lives in the UK. Right. Another part of that, if you're buying for your children to live in the property while they are students, we can also do what are called, or we can source guarantor mortgages, which means it can be your children who own the property, but it's you who provides the finance. Some people like to do that because, going back to what Mark mentioned earlier, it can save tax if your children own the property and you have the finance on it. We can help you source that too. And there are also a small pool, but very competitive pool of lenders who specialise in just providing finance for parents who are going to put their children in the property. And they do specialist mortgages just for that sector. So, whether you're going to put yourself in it, your family in it, or have tenants in there that will be managed by Benham Reeves, by Anita, and by Mark, and by Widia, and by Alia. Where is she? She's vanished again. Then that's my shares in the telco just gone off. So that's fine. Thank you for that. And whether you are a salaried person, you're a self-employed person, you're high net worth, you're ultra high net worth, among those 40 lenders that are available to assist, there will be a lender who is keen to give you the finance, and we will help you source that. So within our own company, rates are starting around about 4.99% from the lenders that we can access for you. If you have experience of the UK, you have existing property in the UK, it could even be slightly cheaper than that, depending on your circumstances. Fixed rates are available, just the same as they are in Indonesia. Floating rates available, just the same as they are in Indonesia. The way the market works in the UK, however, is slightly different on this particular piece here. Interest only versus capital repayment. So capital repayment, or principal plus interest, or amortization, it has many, many different names. That's the standard way that most people will purchase a property. You borrow the money, every month you pay some of the interest, you pay some of the principal, and over a number of years, the loan reduces, and eventually no more loan on the property, mortgage free. But if this is going to be an investment for you, or you're not intending to hold the property for the rest of your life, the lenders will also offer you the option that on a monthly basis, you only pay the interest. You do not have to reduce the principal in the contract. You can still reduce it yourself if you wish. You can make extra payments to bring the capital piece down and make sure the loan reduces over time. But on a monthly basis, you're not obliged to do that. So why would lenders do that? Because banks are not everybody's friend, right? We all know this. Finance, apologies to any bankers in the room, but banks are out there to make money for their shareholders. That's what they do. Well, there's two reasons they will do it. A, it makes it more affordable, so more clients will approach them and take up the finance. But in reality, if you borrow £500,000 and never reduce the balance over 20 years, and then right at the end you sell the property and then pay the loan back, they have made a lot more money out of you over 20 years on an interest-only basis than they would if you were reducing the principal over that time. However, because you're only financing the interest, it does mean the profit margin on the potential rental income is much larger. Right? If your payment is £1,000 per month rather than £1,500 a month, and your rental income is £2,000 a month, that's a bigger profit margin. That's better for you in the short term, and that also makes it easier for the bank to say yes. When that banker takes your application and goes to his credit department and says, hey, look, this client will make £1,000 a month profit, but client B is only going to make £500 a month profit, you're the better client. And that's what we're trying to help you package and achieve as a brokerage when we're putting together finance that might be suitable for you. You can borrow up to 75%. And a wonderful thing about the UK system is you can do that up to 5 times on 5 different properties all at once. So as long as the first property you buy is net, neutral or positive on the cash flow, you can get a second mortgage at 75%. You can get a third mortgage at 75%. And then once you get to 5 properties or more with mortgages, you're then regarded as a professional investor, and it's a different kind of bank who can help you. So again, we can help you package that and look at different options there as well. Will can only sell you a property up to 35 million. We have no limit on how much money you can borrow. You can buy 5 35 million properties if that's what you want to do, and we will happily help you find the finance. Our fees are very competitive at that level. The other one that people ask me is how long can I have the mortgage? When must I repay the balance in full? Well, actually, the maximum term is 35 years, or age 85, whichever comes first. So if you're 50 years old today, I can get you a 35-year mortgage, right? But if you're 79 today, I can only get you a 5-year mortgage, okay? And anything under that is absolutely fine. Now also, let's not forget, going back to that interest-only comment, whether you were borrowing for 5 years or 35 years, if you're doing interest-only payments, the payment stays the same anyway, it doesn't matter. So some clients will take an interest-only mortgage for maybe only 10 years because their intention is to sell the property, and then they use the sale value to then pay off the loan and keep the profit. You don't have to, my point is, you don't have to squeeze repayments into a shorter term just because you might be slightly older than Will. I'm old enough, I don't have to use myself as an example. I'm too old to get a mortgage. And you can do that as well. Now, there are a number of ways, not to overcomplicate it, but there are different structures you can use to start the finance too. Some people buy in their own name. Some people buy in their children's name. Some people will set up a UK company to purchase the property. Some people have family trusts or investment trusts. All of that can be accommodated within the 40 lenders that we can approach on your behalf. Other mortgages that are out there, just for interest's sake, short-term finance. If something was available and you had to have it next week, but you don't have cash available, you can get short-term finance that can be set up within 10 to 14 days, and it's designed to be paid off within 6 months to 12 months, or be replaced with a different kind of finance. But it's there if it's quick, if it's something you have to move fast on, you can do that. If you're more interested in hotels, offices, commercial spaces, we can assist with that too. And if you happen to also be buying a villa in Europe or a ski lodge in Switzerland or Germany, which Benham Reeves also will happily sell you, we can help you finance that as well. So how does it work? Well, initially you have a 10-minute chat with myself or Becca. We then can fill in a form. It takes about another 10 to 15 minutes. At the very earliest stages, that form is just done on trust. We take the information, we fill in the form, and with that, even if it's 2 years in advance, 3 years in advance, we can approach some lenders in the UK to get you pre-approved. Right? So that doesn't mean you have to use that lender in the future, but what it does mean to give you confidence is we can say, we've shown your circumstances to a bank in the UK, this bank has said, based on your scenario, finance is available. So you can offer with confidence, you can negotiate with confidence when it comes to purchasing your property. Then that will be back within a day or two. It doesn't take long to get pre-approval. We then, if you want to go further and you've negotiated and you're going to buy, we package the full application for you and with you. Now, being here in Indonesia, that might also be slightly slower than some other countries in the region because we might have to get some documents translated, but we have to present everything in English because unfortunately the UK's Google doesn't work quite so well to be able to translate all the documents for us. So we again, all of that is about making sure it's as easy as possible for that bank to say yes once we give them your full circumstances. But we submit all those documents to the lender: passports, payslips, bank statements, the property information, etc. Then it will take about 6 to 8 weeks to process your full application, and then the mortgage offer is issued. Now, a really important part in this process that I like to make sure everybody knows about is that during the mortgage process, the bank arranges on your behalf and on their behalf for an independent surveyor, a valuer, to visit the property. Now, there's a number of reasons why they do that, but for you, the key reason they do that is to double check that the price you have paid is accurate. And they don't work for the bank, and they don't work for you. They're completely independent. You'll pay for it, but they are independent. The bank makes you pay for it. But they double check the price you've paid for the property is accurate. And if you're going to be putting tenants in the property, they also double check that the rental income you have been told you will receive is also accurate for the market. So that's a really unique thing about the UK market, is that an independent second step is put in to protect you and to protect the bank. So if something is wrong with the figures that you have been told, you are well warned and you're given advance notice before you complete the purchase so that you can renegotiate or change the terms of the agreement if that's what you need to do. That's a really good part about the UK system, is that you've got that independent person to protect you and make sure that you're not being oversold or undersold. Now, just another point on that, without making it look like I'm kissing too many people tonight, is whenever it's a Barclay property, I've been doing this for 25 years, and when it's a Barclay property, that thing about the numbers has never been an issue. The quality of the build is fantastic, the prices are always spot on, and the rental estimates are always very, very fair. And then you've got Benham Reeves at the end of that, who are there to manage it for you. There's a bunch of documents, as I mentioned. I've been told I've got 1 minute left. So let me just give you 3 examples of how it really works, okay? So if you're going to be a first-time buyer, first-time landlord, and let's imagine that you're purchasing a £500,000 property, okay? You're going to borrow 75%. And as it says there, you can take photographs if you want. The rental income is £2.5 a month, blah, 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 blah. In this scenario, we've got a UK lender to allow the client to borrow 75%. The interest rate was fixed. The mortgage payment was just under £2,000 per month, but the rental income was £2,500. So that's £503 sterling, which is a million squillion Indonesian rupiah. That's £503 sterling every month that is profit to you. Number 2, this is somebody who already has a UK property, or maybe has a track record in the UK, so you can choose from slightly more lenders, just because they already exist and they're on the system. Same principle, borrowed 65%, rental income is 3,000. When we get to the bottom, the mortgage payment is 1,800. So again, profit, just over £1,000 a month profit, still using leverage to do this. The last one. Now this person has an existing UK property. Now this is true for you if you have an existing UK property with no mortgage, or if you buy a property tonight or this weekend or whatever and use cash, you can do this in the future. But this person had a mortgage on their existing UK property. There was equity available, there was profit available in that property. They didn't have to sell it. What we did was refinance their existing UK property and used their existing rental income and released money from that property to be used as the deposit on the new purchase. All right, so bear with me. So they've created a larger mortgage on the first property, but they took some extra cash out of that to use as the deposit on the next property, borrowing then on the next property for the difference. So what they've done is they've taken the deposit from one property and then used a second mortgage to finance the balance on the second property. So in effect, they have used none of their own cash to buy the second property. So now they've got two properties generating income, used no cash at all of their own, and they've got just over £2,500 of profit every single month coming in. I'm not going to overcomplicate it more than that. Again, many questions. So, I don't know who's closing off, but thank you for your time. If you have any finance questions, approach myself or Becca, and we'd be more than happy to talk about it in more detail. Thank you. Who's that one? She's back.
Thank you, Scott. All right, that concludes all the presentations for tonight, everybody. Sebelum kita makan, we are going to do a Q&A session. So we're going to take a few questions. Is there anybody that want to ask about whether the market to Mark or the mortgage to Scott or the development itself? So, well, ayo, ini kesempatannya loh. Kapan lagi? Langsung dari London. Silakan bapaknya.
Scott, you're talking about
Wait, I'll give you the mic and please introduce yourself first.
Can we get the
Thank you.
karaoke on now, please?
Yes.
Yes, my name is Eric,
Hi, Eric.
and I have a question. You're talking about the residential properties. What about commercial? And for the financing requirement for the commercial properties in London?
And look, commercial,
Commercial,
the difference?
yeah, I think the LTV or the requirement, is there any difference?
No, not really, to be honest. It's an even more competitive market. For commercial finance, 250 lenders available. Each of those lenders will have 3 or 4 different potential finance solutions. So you're talking about 750 to 1,000 mortgages to choose from. I couldn't give you an answer right now as to exactly which one that would be. Yeah. But lots of choices.
But the LTV 75% is the
Absolute maximum. Depends on the industry. Up to 75%. Minimum would maybe be 60%.
Ada lagi? Anybody else?
Bapak, next door, next to
Okay, thank you. My name is Adit. Just curious, I want to ask, if you buy any property in UK or London, can you get any like green card or permanent residence or something like that?
I'm not a visa expert. I don't know how that works.
maybe Mark can assist with
I
that
can do
question.
Visa credit cards, but no.
You can't get a visa for buying a London property, buying any property. Unfortunately not. If you want to get a visa, you can get residency visa, you mean? You can, but that's nothing, property has no involvement with that at all. You just have to make an investment into treasury bonds, and it's a process. It's £10 million for a 2-year visa. It's not easy, but you can't put the money into property, so it's property doesn't. Some countries they obviously offer a passport if you invest in a property, but UK not.
Di UK enggak, tapi siapa saja yang eligible bisa beli apapun warga negaranya. So that's the benefit. So anyone from any nationality has the opportunity to invest, but you do not get them.
Yeah, I was going to say, and also depending on the tourist visa rules and what you're exactly going to do if you do go to the UK, both Becca and I have many clients who just buy a property to use when they're in the UK for business, for holidays, for sports, for football games.
Soccer, we love soccer.
Yeah. Just depends on what, and there's lots of teams to choose from.
Oh ya,
Football. Siapa lagi yang mau tanya? Anybody else have a question? No? Mungkin ibunya yang baru datang.
ya.
Oke, kalau gitu kita tutup acara presentasinya. We will close the presentation section and we will enjoy dinner. And then after that we can mingle, network, and please approach any of us. Bisa dari Benham Reeves or from SPF or from Berkeley. Please come talk to us if you have any further questions. And then if you wanna schedule appointments in the future, you can contact me, Alia, and also my international director Widya. Ini orang Indonesia KW kalau yang ini. Orang Indonesia tapi udah lama di luar.
Iya, iya. Tapi masih bisa ngomong bahasa Indonesia sih.
Iya.
Jadi kalau misalnya aku nggak di Jakarta, sama aja sama Alia, kita bisa zoom together. Tapi kalau di Jakarta kita ada kantor di BEJ.
No, Equity Tower.
Sorry, Equity Tower. So feel free to contact us.
I think SCBD.
Yeah, SMBD. We're opposite. For the appointment. So yeah, please tahu mungkin ada yang segan mau nanya to the floor. So we'll be here. Just ask questions to us. Okay, thank you.
Thank you everyone. Thank you for your time. So let's enjoy dinner.
Yeah. Di luar ada
Selamat
dinner,
makan.
jadi please,
Terima kasih. Thank you. Oh yeah. Wait. Maaf banget.